Hi, welcome to the Oak Trader Report Part 1. It's the 2nd of the 9th when I'm recording this, but I actually put this together and released it on the 1st of the 9th, which was yesterday, which was Sunday, and it covers long-term charts and stocks in the movie and TV production and distribution sector and the finance and investment brokers sector on the American markets. The first stock here, ticker symbol RLJE. You can see it's quite a new issue, and it came out at around the $8 level, made it up to $9.50. Must have had a lot of heavy public participation early on, and that's why the market needed to move down into a lower level area so it could free up some stock and the public would sell out in disgust. And it looks like here the professionals have been buying at these low levels. You could say this was a double bottom. It's broken out of this consolidation area, and this point here just looks to be a higher consolidation area, and it should break out of here eventually to move much higher, and it will probably move up to around the $8.50, $9 level over the next year. Ticker symbol BONA, Bona Film Group Limited. You can see here the double bottom, one here at $3.50, one above just $3.50. The pivotal points. Ideally it is quite a tight graph here. It's only 50 cents. Ideally we don't want to see spikes coming up like this. We want it to flatten out and move up from here. We can see here, if we draw a line, we can see that it's just about breaking the longer term downtrend, and again this was a new issue that had heavy public participation. It's come down just like Facebook did. There was a lot of public involved in the beginning. They had to be shaken out, and that takes a while. The public have been shaken out of this stock, and it looks to be in the process of being edged higher. I wouldn't be surprised to see a consolidation around the $5 to $5.50 level, and for it to break up from here, although it could stay in this area for a number of years, and that's why I always recommend, putting a small percentage into each long-term base opportunity. Ticker symbol CIDM, again massive long-term downtrend broken here. Hasn't really participated at all in the bull market in America. It did mark the turn at the beginning part of 2009 in the stock. It's slowly edged higher, ran out of steam, or so it appears, and it's gone sideways. This stock at this present juncture I believe is an excellent purchase, and I'll be looking to purchase more as it breaks the $2 level, and it breaks the $2.60, $2.70 level and $3 level as well. This stock here should be good to go at least to the $4 level, with the power that it's built up where my mouse is here accumulating. We should see a spring in this stock at least to the $4 to $5 level, and it could go much higher than that. Ticker symbol DCIN, Digital Cinema Destinations Corporation. Again a newish stock here. Came out around the $6.50 level, pushed up to $8, and then it had a nice steady downtrend down to almost $3.50. Where my mouse is here marked the low, the pivotal point, and it sprang back up. And we can see here, if we draw a line along the $6.50 level, that it's developing a nice consolidation. And if you follow my mouse now, draw a line here, we can see that this is developing into a nice flat top triangle consolidation. And I believe that the market from this position should have enough power to easily go up to the $9, $10 level. And then perhaps consolidate from there, and we should see this in the next 6 months. Ticker symbol RRST, again massive long-term downtrend broken here, 2012. Didn't participate in the early part of the bull market in America. It's been edging higher. It's up quite nicely, around 100% off its lows, and it seems to be consolidating around the $8 level. I would say this stock is going much higher from here, up to 10, up to 12, up to 14 is possible in the next 6 months to a year. Nice low volume action here, and you can see the volatility where my mouse is at the top compared to the lack of action here in 2012 at the low, and that's what we're looking for. If we draw a line here from 2011 along here, we can see that it's broken above that gradual trend. It could dip down and test people's patience again, but I would suspect it would move higher from here in the next 6 months to a year, and I would look to hold this for at least a year and to see what happens. Lionsgate, another Carl Icahn stock he was involved with, and you can see the tremendous rally that developed all the way up to the $36 level, and beautiful base action back here in 2011. Great gradual downtrend which is broken, and that's the signal that the technical position in the market is changing, and has changed from weak to strong hands. And once it's in strong hands, the market edges up into nice consolidations, and then the move starts to become a lot steeper. The gradient is a lot higher. You can use this where my mouse is here. If you draw a trend line, once it breaks that trend line, that's where we'll probably see the distribution at that level, and I would be looking out for distribution at any time in this stock in the next 6 months. But as you can see, the beautiful bottom, this is what we're looking for in these long-term trades, and to hold these positions for a year and a half to a couple of years, and really reap the benefits of long-term position trading. Again, I just thought I'd update the monthly chart on Lionsgate just to show you the previous accumulation action. In the chart previously I showed you the weekly. Where my mouse is, you can see the base action, and you can see it was a beautiful flat top triangle there with a great shakeout and a curve which finally developed into a huge upward swing. And you can see, if we move the mouse back to 1999, similar sort of action, flat top here, and then this action here really tests investors' patience. It's just snaking along at $2, not doing anything. People sell out, and lo and behold, you know, a few years later, a year or two later, it's up to $12. They missed out on making 5-6 times their money. Again, you just have to be patient with these long-term trades. Where my mouse is here, if you buy in and the market takes another 5 to 6 months of doing nothing, sometimes that's the price to pay. And that's why I always say, don't ever go in with large amounts. Try and distribute your funds amongst 100 to 200 great looking low-lying stocks. Ticker symbol GLCH. Again, a newish issue here, came out at around the $16.50 level, went all the way down to $12.50, had a spike up, huge move down to $10, and this looks to have been the pivotal point now that the market is resting on. And if we look where my mouse is here, it looks to be developing nice base action, nice consolidation action at this level, and from here I would suspect in the next year it will be a lot higher, easily up to the $16 to $18 level in the next year and a half. Although sometimes, as I've said before, these stocks can test one's patience and stay in a lower level base area for a longer time, but this one looks to be like it's developing some traction here. And if you draw a line along here and draw a line here, it looks to be a nice flat top triangle with that shakeout that we like to see, and hopefully a curve in action that will move the market round and its upward swing can begin. And again, great low volume here. The market's not being heavily traded. It's a bit of a laggard, a dullard, probably not making the news that much as well, so it's not attracting that much interest. And I'm sure when it's up at around the $18 to $20 level, that's when everyone will be writing about it in the newspapers, and we'll see the volume bars here up in the $500,000 to $1 million range in the next year as well. Yeah, here's the ticker symbol GLCH. This is just the weekly chart, just to show you what this looks like from this particular angle, and you can see a beautiful curve in action that comes around, and the base action that's developed. I think my previous chart, I showed you the monthly chart, it was only based on a few years worth of action. If I just flick back to it, we can see what it was based on, and you can see here I've just put a daily chart. That was it. That was the daily action. So it wasn't a new issue, it was just the daily action here. But as you can see, when it's tight like this on the daily, it's an extremely good sign. So again, it's extremely positive that it's looking like this on the daily. And this is it on the weekly. You can see how many downtrends have been broken from my mouse. This steep one here, these here has been broken. If you draw a line along there, this one's been broken about here, and if you draw the line from here down to here, it looks like it's going to be breaking this downtrend line. Once it breaks out of this sideways channel, that's when the uptrend will start, and this stock will be good to hold, you know, for 3 or 4 years probably. But the first movement we'll see will probably be up to the $20 level, consolidate, and then it will break out and make new multi-year highs, and that's when we'll see it really develop into a good move. But it's got a tremendous, if you look at my mouse here, the curve action, it's got tremendous curve action, and there's only one way I believe that this stock is going in the next couple of years, and that's much higher from where it is now. Ticker symbol SWS, again downtrend broken on the weekly 5-year. You can see it now snaking along and developing a base, not an exceedingly long base. Again, you don't need to buy in. You know, if you've got discretionary spare funds available, then maybe yes, but at this present juncture it's probably be better off just to wait till it started maybe breaking through where my mouse is here, about the $6.20 level. So that way it looks like it would break 7, but from here it could snake along and develop into a longer term base, but it's definitely on the watch list. The volume, the volatility is becoming less, and it's making positive signs. And you can see here the triple bottom, 1, 2, 3, and whenever you've got that in a market, good few months apart here, a good year apart here, this is a very positive sign. And once the market where my mouse is breaks out of this consolidation area, I would say 7's the signal. I believe we'll be in an uptrend, a multi-year uptrend that will last at least a good few years. But again, it could take another year to develop, but it's looking very good. This is it on the monthly. As you can see, the downtrend I showed you on the weekly that was broken, a multi-year downtrend. It's developed nice base action, and if we throw our mouse back to 1995, the base action here where it broke the downtrend base, you could say the base really began here. The move didn't start and it snaked along and it based here. But if you draw a line where my mouse is here, you got the perfect flat top triangle with no shakeout, a move straight up. And we should see this base developing into a similar type of move, perhaps not a parabolic move like we saw in the bubble of 1999 and 2000, or during the latter 90s, but perhaps something tamer. But we should see this market over the next couple of years developing the power to at least move up to the $25–30 level at some point. Ticker symbol SIEB, again a big downtrend broken here on the monthly, and this looks to be good accumulation action. Again, I'd prefer to see a snaking along action of at least 2.5 to 3 years, but anything really over 18 months is pretty good. This looks to be developing into an uptrend, and it's curving around, as you can see here if you follow my mouse, and we should see it moving much higher from here. And we've also got the bottoms 1, 2, 3, 4, and they've remained steady. And we've got this downtrend as well that's been broken about here. So we should see this market move up, although it could again screw around in this lower area for a bit longer. But it is looking positive for the future. Ticker symbol JMP, just a monthly chart here. I believe it's a monthly, yeah that's right, a monthly 5-year or a monthly 10-year, and again you know, if you look at this from a triangle perspective where my mouse is, if you draw a line, it's developing into a long-term triangle. Ted Warren used to talk about these being good for 100 to 200% rises. So if we were to use that as a guide, the foundations that's being built, we could say that this market would be up to the $14 to $21 level perhaps in the next year or so. And it does look to be developing into a nice longer term triangle. Interactive Brokers Group, I've traded with them and still have an account with them as well, IBKR. You can see here the bottoms at 13, 1, 2, 3, 4, 5, showing good strength there. Couple of years gaps between each bottoms as well. Perhaps not, you know, fantastic quiet action here, but the range is very tight for this being a weekly chart. It's only a dollar range. So if this was on a $5 chart, the range would look extremely tight, this area here. And I would say that this market looks to be showing signs of a breakout with the curvature here, and we should see this stock moving higher over the next 6 months to a year. But again, it's up quite high from this level, and we could see it back to the 16 area and consolidate before it gives itself the power to break out above 18 and move much higher. Ticker symbol COWN, monthly chart here. As you can see, a massive downtrend being broken here, and then this gradual downtrend being broken here, this gradual downtrend broken here. Great signs with 3 downtrends being broken, and you can see where that last gradual downtrend was broken was a perfect signal to go long the stock. And if you look at it now from the 4th aspect of breaking out of a trend, so we've had 3 trends, one a steep trend, one a semi-steep trend, and the other one a gradual downtrend. This one is what we call, say, a sideways consolidation trend at 3, and if you draw a line along, it's broken out of that and it's sitting above that as well. And it's a tremendous signal. I believe this stock will go a lot higher from here. We could see this up around the $6 to $7 level in the next 6 months to a year, and I would suspect it's developing the power for it to move at least up to the $9 level in the next 2 or 3 years. The only thing I would say is this bigger volume action here, but this still could be professionals buying into the market for whatever reason. If there was any public holders of this stock, maybe they've decided to liquidate at the beginning of 2013 and mid 2013. So these bars, for every buyer there's a seller, so the sellers could have been the public and the buyers could have been professionals. It's definitely shaping up that way on the pattern of the stock, and that's the only mystery that I have here. I much prefer to see lower volume signals like this back in 2009, but again, I wouldn't let this put me off because of the fantastic foundation that this is built. The longer and the better looking the foundation, the larger rise the market will have. Ticker symbol GFIG. You can see here, big downtrend broken, another gradual downtrend, well, semi-steep downtrend broken here, and then you've got this gradual downtrend that was broken, and this little consolidation area where my mouse is the area above where the gradual downtrend was broken. The volume looks to be tapering off nicely. It looks to becoming a nice and boring stock, not too much excitement around it. It's broken out of its sideways consolidation base level as well, and it's hanging around above it, and I would say that this stock has easily got the potential to go to 8 or 10 in the next year or two. And remember, it's all about long-term trading. It's not so much worrying about what it does over the next 2 or 3 months, even though the Dow's looking excessively high and it could be entering a period of extreme volatility. I tend to only look at the stocks. I use the Dow as somewhat of a guide, but the final decision must always rest on the individual stock. You know, you've seen it before, the Dow's down 300, but there are individual stocks making moves up and staying in downtrends, and also the nature of the market can change over decades, and we may be entering a period where we have lots of stocks in different sectors moving up and down at different times, perhaps not necessarily how it was 10 years ago, where everything moved up together and went down together. So times do change, and I tend to use as the deciding factor the actual action of the stock. And the action of this stock is excellent. It's breaking gradual downtrends, as I've said, and it's consolidating nice and quietly as well. So I would be prepared to look after this stock for a couple of years, and you could see it well above $8 to $10. Okay, I'll be uploading part 2. The text version is already uploaded on the Oak Trader report, which was done yesterday, and I'll be uploading that in the next couple of hours. Okay, have yourself a great evening and take care. Bye for now.